Welcome everyone. In this video, I want to show you how to look for key levels in CRT. Now, as we all know, key levels are areas where price react from or where price retrace or reverse from. It's an area price get to and it causes a reaction or a reversal. As you can see in this diagram that I draw here, you see that price gets to this key level and it reversed back. Price get to this level and it came down. So key levels are areas price get to and there's a reaction or a reversal, either a reaction or a reversal. Now, why is key level important in CRT? Key levels are important because they are the areas we get our CRT candles that we trade. The candle range that we trade, we get them at a key level. When you get your CRT candle from a key level, it becomes an high probability CRT candle to trade. Now there are two ways we get our candle range that we trade, either from a key level or the forming time. The forming time is 9 p.m., 1 a.m., 5 a.m. or 9 a.m. So we get CRT candle from a key level or the forming time. Now when your CRT form at a key time in a key level, it becomes an high probability CRT to trade. So when you're looking for your CRT candle, always look for it at the area of key levels, right? So I want to show you 3 key levels that I personally use that I learned from Shams. I learned these key levels from Shams' video, and they are high probability key levels that you can also implement in your CRT trading, and it will help your trading. So let's go into the video. Number 1 is an hold high, external range liquidity. As you can see in this screenshot, you discover that the candle range that I mark as my CRT is the candle that stab into this hold high. It stab into this hold high, making it a valid CRT candle to trade. Are you seeing that? So when it stab into the hold high, the next candle purge the CRT high and the price begin to retrace down. So when you're looking for your CRT candle, the candle range, look for it at the area of a key level, and hold high or an hold low. Now sometimes this candle range, this particular candle, the CRT candle itself, sometimes it will not stab into the hold high. Sometimes it will get close to the hold high, the key level, and it will stop there. Then the second candle will purge the key level, the hold high, and purge the CRT high together. Then price will retrace back. So sometimes you might see the candle range stab into the hold high, as you can see here. Sometimes it will not stab into it, it will just get close to it. Then the second candle will stab into it and it will retrace back. So when you're looking for your CRT candle, whether in the daily time frame or in the 4-hour time frame, always look for it at the area of a key level. As you can see here, it stab into the hold high, then the second candle purge the CRT high and it begin to retrace down. This is an high probability CRT. Let's move on. As you can see here also, this is an hold low that market stab into. Then the candle that stab into the hold low is the candle we use as our candle range. Then the second candle purge the CRT low and also purge the key level before price retrace back up. Now as you can see, this is very important because this key level will make the price, it will support the price to push up or it will support the price to go to your direction. So that is why it is very important to look for CRT at the area of a key level, right? So number one is hold high and hold low. External range liquidity, hold high and hold low. The second key level we use is an FVG, internal range liquidity. As you can see, price dip into this FVG, which is the key level, and it sweep the CRT high, as you can see here, and it begins to retrace back down. Are you seeing that? Now, if you can see this diagram, why do I use this place as my draw on liquidity? You can see the place that I marked down here as my draw on liquidity is because the price is already bearish. The price is bearish. I know the price is coming down. The market direction is bearish. So all I need is an CRT to enter the market and trade downward. As you can see, price get into this FVG. It purge this CRT high. It tap into the key level, and it began to retrace downward. As you can see, it retraced downward to this key level that you can see here. So number one, external range liquidity, hold high and hold low. Number two is an FVG. Always look for your CRT at the area of key levels. Okay, and the last key level I use is lower time frame CRT in an higher time frame CRT. This one is very, very effective. It's one of the best key level you can use. Lower time frame CRT in an higher time frame CRT. As you can see in this diagram here, this screenshot, this is a daily CRT, right? I mark out the daily CRT high and the daily CRT low, and I wait for the market to purge either the high or the low and close. That means I will wait for the second candle to purge to sweep the high of the CRT or to sweep the low of the CRT and close. Now once it closes, that already gives me the idea that the market is going to trace down to the CRT low or the 50% of the CRT in that daily time frame. So all I would do is to go to a lower time frame like the 4 hours to look for a CRT in the 4 hours, right? And I would target the low of the CRT of that 4 hours, or I would target the 50% of the daily CRT or the low of the daily CRT. Now I want you to look at this diagram. This is daily CRT. The market purged the high and it closed. So this third candle in the CRT, in the daily CRT, I will look for an opportunity in the 4 hours to trade this 4-hour CRT, either to the 4-hour CRT low or to the daily CRT 50% or the low of the daily CRT. Do we understand? So let me show you in the 4 hours what I'm saying. Right, now as you can see, this is the daily CRT low and this is the daily CRT high, and this is the candle that purged the daily CRT high. As you can see, all I will do now is to look for a candle range that I will trade in the 4 hour, either to the 4-hour CRT low or the 50% of the daily CRT low, or the daily CRT or the daily CRT low. So as you can see, this candle is 5 a.m. CRT. Then the candle that purged the high is 9 a.m. As you can see here, when it purged the high, I go down to 15 minutes to look for my mode 1 entry. Then I traded it to, first target was this 4-hour CRT low. Then the second target will be the daily CRT low, as you can see here. So this one is very, very effective. All you need to do is to wait for a daily CRT low or high to be purged and the candle close inside. Once it purge and close, you know that all you're looking for is to trade the third candle. You already know that your bias is not bearish. So all you need to do is just to go to the 4 hours and position yourself to look for a CRT to trade, and you wait for the candle to purge the high or the purge the high based on the direction you are looking for. As you can see, this direction is bearish, so I wait for the candle to purge the high and I go down straight to 15 minutes and I look for a model 1 entry and trade down to the 4-hour CRT low. Then the final target was the daily CRT low. Now, if you don't know how to trade model 1 entry, you check my first video. I explained how to trade model 1 entry in that video. I hope this bless you. I hope you get value from this video. God bless you. I will see you in my next video. If you have any question, you can drop in the comment section, and if you want to join my Telegram channel, you can check the link in my bio. My Telegram channel is there. You can join us. God bless you.